All right. Waiting for a little sound check here. Good morning, everybody. Happy Monday. Wow. The only excitement that we had, if you're into golf, was watching Bryson DeChambeau win the U.S. Open. Congratulations. What about the markets? Last week we came into this week um, with another, you know, uh, 8 or 9 stocks leading the charge, and it was all some of the MAGA names. But in the meantime, we started to see a massive breakdown in the breadth of the market, the advanced decline here in the IWM. We'll start with that. Small cap growth. In the weekly video I did, I said, listen, it's not at the low end of the range. It's not at the high end. It's in the middle of the range. The advanced decline has broken down. No volume according to both the trend of volume OBV, right, as well as my volume indicator. It's just missing volume. So little by little, lots of stocks are going down. They're not accelerating to the downside yet. So something we have to watch for volume to come into the picture. In the meantime, I think it's all a buzz through the internet world and emails, and everyone's looking at what we call the bearish divergence in the breadth. And what this just signifies is that the advanced decline has been leading lower in the Qs, which only has like 102 stocks actually, as it's made new highs, which means the leadership is getting narrower and narrower and narrower. It's only a few stocks in the AI phase of this market rally that everyone wants to get in. Volume did uptick over the last 2 days. We are in a neutral negative stance for the JP MIC oscillator. So the question is, where do we want to go with this? Where's this market going to go? How do we trade it? My 2 cents is that we want small positions on the downside with some put options. One of the things that we covered last week was there was out of the foreign market ETFs. Remember, there's around the globe, there's been elections. So Modi, the prime minister's party in India, did not retain power, but Modi is in power. And so it was quite a wild structured move before the election. After the election, you could clearly see, I mean, from 54 down to 50, I mean, you get into like 8% moves overnight and then gap back up is pretty crazy for an ETF that does not trade like this. Next, I follow consistently the high yield corporate bond ETF, which has not been moving in sync with higher prices, which still signifies that people are more interested in being in treasuries rather than being in maybe corporate debt and bonds that are issued by companies. So what about the rest of the world? Well, we all heard earlier this year that Warren Buffett was investing in Japan, and for good reasons. The market rallied. But where's it going now? Japan, this is the foreign market ETF, the EWJ, priced in dollars. So before we go and someone says, but John, the dollar's been going up. Sure, the dollar's been going up, but relative to where the dollar was at 104.02, 104, 105, a 1-point move in the dollar does not justify the type of declines that we're seeing in the cap weight or the EWJ and the foreign market ETFs. So this is based off of a little bit, maybe dollar strength has caused the market to come in a little bit, but it's overall stocks that are coming down in Japan. Emerging markets have done a little bit better. They're sideways. Canada just lowered interest rates. It did not really help the Canadian stock market. It's down off its highs. Now we go into the UK. This is the EWU. It's perceived that the Bank of England will be lowering rates soon. What's interesting is this market had a peak high, first low, a secondary testing of the high on negative volume structure, and the market's fallen through, actually coming into a weekly sell signal. So the next one I'm going to cover is EWG Germany. We did this in the live trading room. Some people weren't there on Friday. What I want to mention is that here's the EWG. All of these foreign markets, EWU, Italy, all these markets, Brazil, and this is Latin America. So the key is, I think, that we're structuring some downside puts in the SPY, because if rising tides floats all boats and foreign markets can go up, I would suspect that we could see some retracement coming in the market. Our advanced decline work is weakening. Foreign markets exchanges are weakening. So it would make sense to have something within the next 10 days or so to the downside within a 1 to 2% S&P move minimum objective. So what we're going to cover in this week, we have our weekly, or not our weekly, excuse me, our summer workshop starts Wednesday. It's Juneteenth. It's a holiday, but still we have 3 weeks for our option class. We're excited about that. We also have coming up, don't forget, if you're interested, to register for our December in-person seminar that'll be hosted right here in Palm Beach Gardens, Florida in December. Certainly visit the website for more details, and we'll push out some links to that effect. This week is going to be a light economic reported week. We'll get into some more trades in just a few minutes and some setups, but I just thought for overall, for those listening on either YouTube or for those listening that are in the recording sessions, take a look at what I'm talking about and reflect what positions you're in, because when you start to see foreign markets go down, when you start to see breadth break down, it's only a matter of time. One of two things are going to happen. Our markets will pull back, or everyone's going to think that this is such great value. Our stocks have to go up to align with that breadth. And so I think that we're due for a small pullback in this market environment, and that's what I would be positioning for. Thank you for listening to this portion, and now we'll get back into more trade setups for the trade room.